Hey friends, welcome back to my channel where I talk about all things investing. So today we're going to be discussing the recent testimony by Federal Reserve Chairman Jerome Powell before the Senate Banking Committee and what that means for us investors. So let's get into it. During this meeting, Powell reiterated that inflation is likely to remain elevated in the near term, but expects it to eventually moderate as the supply chain disruptions caused by the pandemic subside. Now, this is good news for us investors as high inflation can eat into the value of our investments. However, Powell also stressed that the recent surge in COVID-19 cases and the Omicron variant could pose a threat to the economic recovery, so we are still not out of the cautious zone. Despite concerns about inflation, Powell emphasized that the Fed's focus is on achieving maximum employment, which is a positive sign for the economy. Now, he also mentioned that the Fed is committed to promoting a more inclusive economy, which is important for investors to keep in mind when making our investment decisions, right? During the testimony, several senators also pressed Powell on the issue of inequality, with some suggesting that the Fed's policies have contributed to a widening wealth gap. Now, Powell acknowledged that the inequality is a concern, but also reiterated the Fed's commitment to promoting a more inclusive economy. So what does all this mean for us investors anyway? Well, Powell's testimony suggests that the Fed is unlikely to make any major policy changes in the near future and will continue to prioritize economic recovery and maximum employment over concerns about inflation. Investors should remain cautious in the light of the ongoing pandemic, but overall, there are reasons to be optimistic about the economy in the long run. Now, if you're wondering, how does all this relate to investing in cryptocurrency? Well, while Jerome Powell's testimony primarily focused on the U.S. economy and the Fed's monetary policy, it indirectly impacts the cryptocurrency markets as well. The Fed's decision regarding the interest rates and economic recovery can affect the value of the U.S. dollar, which in turn can impact the value of cryptocurrency that are traded against the dollar, such as Bitcoin and Ethereum, just to name a couple. So if the Fed maintains its current stance on interest rates and prioritizes economic recovery over concerns about inflation, this could potentially lead to a weaker dollar and a higher inflation, which may make the cryptocurrencies way more attractive investment options for some investors seeking to hedge against inflation. That is all. Hope you enjoyed the video. Give it a thumbs up, follow for more, and subscribe to the channel. I'll see you in the next one. Till then, bye friends.